Hello, this is Lee. Happy New Year to everybody. And this is going to be the first video of 2024. Um, it's about the some updates on an existing strategy that I released later last year. Um, Before I go to the details, I just want to go through the disclaimers just for the risk disclosures and all kinds of things for futures trading. I just want to make sure that you've seen this risk disclosure. And it's basically hypothetical tradings and all the performances. They're just hypothetical performance results. And yeah, any futures tradings and any futures performance solely based on the market, and everything is just depends on what the markets do and how you set up your strategies and etc. So I'm not gonna read the whole thing, but I just want to have this displayed so we can move forward. Um, okay, so here you go. Let me just move this over, and this is the strategy. I believe it's called the Mammoth STC, but this new updates. These are the only few updates that I've made to enhance this current strategy with a manageable parameters for you to uh, apply to your trading style. So first, this is the updated version is called Mammoth STC with TS. TS means trailing stop. That's a feature that was requested by some users that they wanted to have, and I added to it. And also, the strategy is running on a time-based bar, which is a 1 minute bar. And you can do unirankel bar as well. Minute bars will be a little bit easier because it's based on stochastics. And also, this chart that you see is NQ March contract. Okay. Now I just did a playback um, test based on the parameters I had optimized. Now, the reason I did a playback because trailing stop feature sometimes you cannot really um, run with the Ninja Trader Analyzer to optimize the settings. So playback will be the ideal way to see the actual results. Now, STC with TS, I just want to show you the strategies, the parameters. So by default, I have target at 50 ticks. Now after that, you have a trail trigger, which is 20 ticks. So once the market moves into your favor by 20 ticks, then the trail distance will be 50 ticks from your 20 tick profit level. So that basically you 50 minus 20, you have a 30 ticks below your entry price as your stop loss. Now trail frequency is 4. Every 4 ticks it'll move the way that the trade is heading to. Stop is 130 ticks. Now this is the stochastic K and D and also smooth. I'm sure you're all familiar with this. K is 14, D is 1, and always set as 1. And then it'll follow the 14, which is K. And smooth is 6. Overbought, we set at 80, and oversold set at 20. Filter period, which is 25, the filter is HMA. Okay. Now, this settings, I optimized a little bit. Uh, and it's based on NQ. You can run it on any instrument that you want. Now the start time is 9:35 a.m. It is the central time. The stop time is 2 p.m. afternoon central time. Daily profit I set at 418 and daily loss at 444 negative. So now this part order field resolution, since it's a time-based bar, and you can set it as standard fastest, not the high standard, because it's a time-based bar. Any entry price will be the open of the bar after the entry, the signal occurs. So, and the entries per direction for this current version, you can do one entry only. But in the future, if it's requested, I can add several entries to it. It will make it more complex because have a lots of values you want to have. You have to set here, so this whole thing will be very long. And I'll try to minimize it to make it a little bit easier to enter the data. The set order quantity right here is by strategy, which is one order, one contract per trade. And you can do default quantity. You can set to default quantity, then you can change the number to two or three or four or five contracts. But however, you have to understand that five contracts, for example, you're trading, the trailing star is also pulling the five contracts, not the other setup that I had for other strategies that you can do. You can do the trailing for the second entry or third entry. Leave the first entry as a small profit entry. So, anyways, that's this is the settings of the strategy. Okay. Now, I just want to minimize this one. What I did was a playback from January 3rd to February 6th. Um, Now you can see that this is the result. Now the strategy, how this strategy works, I just want to go over one more time. Is that let's say this is the statistics. That setting is 114 and 6. One is D14 is K, 6 is smooth. So when the entry occurs, it has to be filtered by the HMA. And once it's filtered, confirmed it is a long entry. This is basically a session and a session divider right here. Now, I just want to show you. Here we go. This is the trade that happened on the 6th, 10:58 a.m. Central Time. Now, what happens here is obviously this is a loss right there. You got a stop loss right there. Um, but I just want to go over this is a long trade. How this occurred, I just want to make sure you understand this. See, this is the signal bar, means that the signal bar corresponding to the statistic, which is right here. See the dot right there? This dot is D and the K altogether. Basically, it's a D because D is set as 1. It follows K. So it's 21.8, which is greater than the oversold level, which is 20. All right. So first criteria met. And then the previous bar has to be, the statistic has to be below or equal to the oversold, which is 20 level. Now the D is 18.74. So the conditions are met for this. That's why a long trade happened. The entry price is the open of this bar, which is the following bar after the signal occurred. So you see the open bar, the open is 17,597. The close of this bar is 17,596.75. Um, so basically, the 17,597.25, that's a market price which you got filled at this moment, and then it got stopped out. Okay. Now, for the strategy, since it's a trailing stop, there's a trailing stop set. For this strategy, like I mentioned, um, the trigger is at 20 ticks and distance is 50. So this trade did not even move up at all. It didn't go to 20 ticks. If it went to 20 ticks, then the stop loss will move up 50 ticks from the trigger price. Let's say you're from here, 20 ticks is 5, basically 5 points right here, right? So if the market went here, then the stop loss will be from here to here. Sorry, that's 50 ticks, which would be right here, somewhere here. And you get stopped right here once it's moved up. So that's how the trailing stop works, okay? Um, anyway, so now for this is for long. And once the long entry is in there, if there's another short happened, it won't flip. Basically, because I had the code's a little bit updated, and then it won't happen. There will be no flip trades. Okay, let's find another trade so we can take a look at it. See the trailing stop, how it works. Okay, that's this day doesn't have a trade. There you go. We have some trades here. This is the this is February 2nd. Okay. Now you can see it right here. This is a long entry. All right, long entry right here because this bar statistics, this one's above 20, and the previous bar that is below 20. So, and also the HMA is this current HMA value 66.94 is higher than the previous 63. So it's confirmed long right here, entry here, and profit right there, 50 ticks. Same thing as a short entry right there. The short entry, okay. Now the this bar's statistic has to be right here below 80, right here 78. But the previous bar has to be above 80 or equal to 80 right here. So 80.12, that is above 80. And this short confirms. I'm sorry, the HMA also is lower, 33.30, 33.90. So three values are confirmed and short right there. And now stop loss. Why stop loss? Because it hit 20 tick. I mean, hit 20 ticks. So the stop triggered from 20 to 50, and it got stopped out at the trailing stop happened. So basically, that it didn't take that much of a loss if this trade turned around to be long. It did not. It could have hit the target, which is the 50 ticks easily. But since you have a trailing stop in this strategy, that's why it got stopped out at the trailed stop. So that's the different. That's the pros and cons of a trailing stop. It depends on what you really wanted to achieve. Um, but for this setup, you can always uh, change the settings, change the trailing settings based on what you wanted to achieve. Now, let me see. This basically has all the long and the short right there, and this one hit the target. This sell, it trailed, but it didn't hit the trailing stop. Eventually, it hit target. You're done for the day. Um, so two trades. Actually, this one's got three trades right here. This one's also this one's winning trade. Um, this one's a trailing stop. Got hit right here. You can see. Now, in order for you to, if you want to do a linear trader analyzer optimization, you can actually, when you do the optimization, you can go ahead. Let's say, for example, you can go to strategies, and when you do optimizations, make sure you neutralize those values. Let's say trail trigger at right now it's 20, you can change to 0, 0, 0. So if all these values set to 0, and then there will be no trailing stop, only target and a stop. Then you can do the optimization on your own. And the rest of the parameters you can set based on what you believe. But for the oversold and overbought, 20 to 80, you can do between 10 to 30 or 70 to 90. 70 to 90 is overbought, and 10 to 30 is oversold. And then you can do incremental by 1 or 2 or 3 or 4 or 5. The rest, daily profit, you can change, depends on what you wanted to trade. So yeah, that's the details of this strategy. Um, what NQ's been doing, it, you can trade MES as well or NQ. Uh, with statistics and HMA, I don't think you need any more indicators to filter the trade. The time set 9:30 to 2. 9:30 is Central, which is 10:30 Eastern. Markets slowing down, but not too slow, and a little bit there will be trends going on, and you'll have some good trades. So overall, for this strategy, for the performance, and you look at $700 as the max drawdown, which is, I believe, one stop, and then it will be done, which is the 29th of December. That's the day before New Year. I don't think people will trade on that day, but the rest is, you can see this one trade is a trailing stop. After it's done, it's done. And this one, another one stop. And here's another one, one stop. Then the strategy will stop looking for another trade. That's just based on trailing stop settings. You can do all kinds of settings and test and see how it goes. Hours of day, if you go to change to entry time, and you can see based on this strategy, the best time is 11 a.m. to 1 p.m. to avoid the 9:30 entry time. The 9:30 time you had a $800 in net loss. So you can actually modify this strategy to trade from 11 to 1. Then you'll have somewhere around positive result. And then you can also drill down to half hour of the day, and then you see, okay, now 11:30 to 1:30, right? And these are good times to trade. So you can actually do all kinds of testing, but the fundamentals of the strategy is based on statistics, and the parameters are very standard in the industry. You can actually play with it and make it the way you want it to work with. Okay, but the features that I add to it is automation. Basically, you can actually do trailing or set up as a break even. For example, you can do like a trigger price at 30, and trailing distance you can set to 30. So if you do 20 as a trigger and distance is 20, that means that the stop will move all the way up to the entry price, because the entry price is 20 ticks away from the trigger. So that basically is a break even setup. And trail frequency, you can do like a 4 or 1 tick. So if you move 1 tick above, and then that trading stop will follow. So that's another another setting you can play with. Okay, this is pretty much it. And then you can download it from a website and test it on your own. So thank you very much for watching, and I'll probably have more videos to do more optimizations based on this strategy, and post it on YouTube for you guys to reference to. Again, thank you very much.